looks like a manipulated, artificial type, squeeze. And that's how distribution happens. I liked Anthony's post. He was talking. He's been around the block for a long time, meaning executors, and he was just talking about the disconnect. And you have to look to traders that have experience. Every judgment of theirs won't be right, but over time, smart traders like that that know the things that make markets move and have seen all kinds of markets from bulls to bears to in between. You have to listen to their advice, I believe. So if we get just caught up in the 5-minute chart, very easy to think about one individual trade as so meaningful, but they're not. If we scroll back and we look at a little bit deeper charts and we see the way the market has been manipulated from these type squeezes, it's very easy to just think one way, and say, okay, this is super bullish, and guess what? Until these gaps get taken out, the squeeze trade is still here. But those are manipulated moves. And a lot of times, newer traders don't understand that, the bull climbs the stair, but the bear jumps out the window. So you could have 4 or 5 days, up in a row, and then you have one day that can undo 2 or 3 of them easily. One bad day, where we get distribution and somebody's left holding the bag. So we said today, be very conservative. You don't want to buy the 96, 95 area high at the open, but if you're going to buy, then give yourself a little bit better odds for a day trade anyways. So when everybody is being a cheerleader and everybody is, screaming on TV about how strong the markets are, it's time to wonder when, that top really is going to hit and come back. And certainly, we're going to look for levels of support. It's not going to all happen in one day, but these are manipulated moves. And we said that. It was like whack-a-mole today, where that 86.75 held, and here we are, overnight, right back up. But these are artificially done. These moves are easy to do overnight in low volume. So they're always suspect. And as a day trader, if that's the way you're playing and don't work at risk, then you look to see if you can eke out a few. You don't need to get anything more than one good trade a day. If you had your good trade today, and if you took a little contra trade, guess what? Play golf this afternoon. Go shovel snow east. And always looking for levels of support. We said today, got to 92, be happy. Anybody got to 92, if you were thinking, okay, we're going to get a repeat of yesterday, guess what? Markets don't move the same day after day after day like that. So the traders who are looking for too much are the ones who lost in this rotation right here. And if you look at it from the standpoint of sustainable, trend lines and so on, you can see you got a trend line here, but usually these are, pretty steep. So even if you get a breakout, it may not be sustainable. So no reason to be trading lunch today unless you bought a contra and you have a trailer. And if you're trying to, short here, you may be better off not thinking too big a pullback, because right now the market is trying to squeeze the shorts a little bit and see if they can't bump stops at all. And even if stops get bumped, there's no guarantee that they're going to run forever. So as we said, let's think if they push the envelope, 99.5 is the first target they're going to try to hit, and then try to get it over the 1500. So everybody's thinking defensively today, 1502, big resistance for us. And I'm not making a call that we're going to hit that target. I just think that anybody who played at the open, they were figuring. You had to assume that any early longs were going to get faded and come back down. So realistically, we said don't overtrade this, and that's what we've had, a very choppy range type day, and trying necessarily today to overtrade and not overthinking Afternoon is the playground of the big boys squaring. And sometimes you get a little volatility in the afternoon, but there's no reason to be trading lunch right now. You know, there's nothing to prove. You know, you're risking 2 to make 2. Not very good odds. Better saving your powder for better trades. And that's part of the discipline of the business. Just knowing there are times when there's no real edge to trading. So, you know, rarely do I watch TV. The guys were talking, I put on that TV show everybody was talking about just to get a little entertainment for a few minutes. And when everybody's talking about all these big numbers, you know, I mean, that's when you have to be very conservative. Doesn't mean today you'll turn around or tomorrow or the next day, but we're probably getting closer to an area that needs to get a smackdown and keep everybody reasonable and realistic. So today, good trade here. Anybody who bought the contra, remember we said the day's long from low to high, so this trade is a contra trade and should get a bounce back, and the question is how high will it bounce? And then the framework of the RTH, this was primary trade, and then this is a contra to that, but this is a trend trade with, you know, yesterday's low holding and trying to test that double top. So always opportunity in the market, and the most important, when your judgment is wrong or your timing is wrong, just accept it and go to the sideline. Don't compound an error and make it worse.